Hello guys, welcome. This is Yassine. Another video. Today let's talk about some of the stuff that I tweeted today. Some of the good charts, good setups. So you can see this is my page. Twitter. This is this is my name right here. If you want to follow me, I'll tweet a lot about stock setups and my opinions. If you want to follow me, you're welcome to do that. Stocks that I want to talk about a lot of stuff, but probably video is going to be way too long, so I'll try to keep it as brief as I can. As you know, I started this channel solely because for people who just started trading. I want to keep it simple, and I want to give you the basic, and then I can learn with you, and then you can learn with me as well. What else to say? I started trading years ago, about like 6 or 7 years ago, and it's every time like I go and then I look for information on YouTube, and it's out in other articles and vlogs. It's always like you don't like your level, like you're just like pre-garden, and you find information. Most information that or things that you're gonna hear from people, it's just like it's basically you hear it in somebody else's perspective as far as the market. And for me, as far as I'm concerned, like I like to learn. If I want to teach somebody something, like I like to know like the whole general idea. Like if let's say I'm showing you a map, I don't want to go specifically to the city and then the routes and the streets. I want to see the whole country first. I want to see the whole general idea before I started zooming in to a specific spot. So that's what I did, and I hope I did in my previous videos, my early videos. I never teach trading. I'm not a teacher. I'm not a financial advisor, but I like helping, and I like talking. Stock market is my passion. I lost a lot of money, and I'm still in the process of getting to that curve where when you start like becoming consistently, and then you stop in your losses. Thank God, like my losses are not like they used to be, but so I'm just sharing with you my experience, and I'm giving you like as much information as I can. But on your part, you still have to learn. You have to put in a lot of work. This is not like just something that you teach. Like I teach you a pattern, and then all of a sudden you look for that pattern, and then you find it, and you put a stop loss and you're successful. Stop loss, finding pattern is just a piece of the puzzle, man. There's like risk management, there's position sizing, there's like condition of the market, how it looks like. Is the market choppy? Are we in the bear market? Are we in the bull market? There's like so many pieces in the market that I think I did explain it in some of my videos. Just go back and look for that video. I don't remember which one, to be honest with you. I don't have a lot of time on my hand to edit the videos and all that. I just give it to you raw, just like you hear right now. So I'll keep it simple. If you have questions, I like to do some lives sometimes, but usually I'm off on the weekends. If you want me to, I don't care if I'm doing live only with one person. I mean, I like talking about stocks. I like to finding setups. If you could let me know like what day I'll do lives. I'll do like an hour to 2 hours. Sometimes discuss stocks, mainly like setups and how the market looks like. I'll be happy to do it. Just let me know in the comment below what day usually you guys are good to. Usually I won't be able to do. Mainly like my on the weekend it's what I'll be available. All right, enough talk. Let's jump into the stocks that I tweeted today. Lazy. As far as you know, I don't know if you know about me. I follow IBD, the canceling, but I have like my tweak to it. I'm more on technicals. Before I never really paid attention to the fundamentals, but recently and probably last year I started implementing fundamentals as well. I mean, it won't hurt. If you have two pieces of information, why not just use all of them, you know what I mean, instead of just using one. But I'll tell you this, I would never buy a stock that have bad technicals and great fundamentals. I'll do the other way around, but I won't do vice versa. I would need great fundamentals, great setups, low risk to reward ratio entries, and then I'll buy that. But if you have just great fundamentals, probably you're looking at invest in the long run. We're talking like 20, 30, 40 years. Then just like then just short term. I'm a swing trader. I'm leaning a little bit more right now to position trader, but I'll let the stock guide me, and then I'll let the chart and the price tell me what's going on. All right, first chart, as you see here, an hour ago, I tweeted about lazy. As you can see it, stock really had a great run. It was really not that liquid back here. It had a breakout right in here at $5. Usually I will trade stocks at above $15 with at least 200,000 volumes. The stock, it's on, I put it right in here, an auto and truck dealership. I tweeted about the stock way back when it was working on this area right here, on its right wing. And again, to be simple, when I started learning about stock, and I paid for a lot of courses, and I learned different perspective from different people, and then it really takes time to digest all that and get the whole idea. So before, like, I mean, there's nothing wrong about this trading support and resistance. Like if you have a stock that's trading into a range, just like that, and you buy a breakout, there's nothing wrong with it. Or buying like a retest, like this, the stock will go right up here and then come back and then bounce back, and you buy it right at the retest. There's nothing wrong with that. You just have to find whatever fits you, whatever you feel comfortable with. What is your risk reward ratio? I would suggest not to risk more than 10%. Even 10% is way too much. Sometimes I do it, but I lean most of the time not. Like 4%, 5%, 3% will be good. The lowest risk to reward ratio that you can find when you scan, almost when I do scan, I look at like hundreds of charts every day. That's how you train your eyes, the better. So yeah, if you trade breakout, there's nothing wrong with it. Just as long as you know what are you gonna exit. That's the main thing. The main thing is not to win like every single trade. You can lose 9 trades out of 10, but when you keep those losses small, like 3%, 4%. So when you hit that winner and it's working in your favor, just let it work and then let it run. Put a moving average. I'll talk a little bit briefly about some of the stuff that can use. So you'll take emotions out of the way. I talked about stocks. Go back to one of my videos. I talked about stock cycle life. Like usually it will have like A to B. Like this is A to B and then B to C. Stock will be in digestion mode and then will break out. And then you can even buy it here. Like if you can buy it here, put a stop loss right below there. If you're conservative like me, sometimes we'll put it here and then let the stock run and let one of these moving averages guide you. What I mean by that is, you bought it right here, for example, put a stop loss, 3-5%, whatever, and then just don't do nothing. Just sit tight. Don't look at the intraday hours and don't let the noise, and just look at the chart at the end. Look at the stock at the end of the day. If is it working in your favor? Yes, it's working in my favor. And then develop again. Your account, like divide your account to like whatever percentage you have. Let's say you have $1,000. Let's say your account, a small account. You have that. That's how I started. I started way small back then. Just divide that $1,000 or $5,000 to like 10%. If you still don't know what are you doing, you're still in the beginning, I will really highly recommend just trade 1%, between 1 and 5%. I trade 10%. Sometimes I go aggressive more than that. 10%. That way, if you have a $5,000 account or $10,000 account, then you divide that $10,000 account to 10%. So you have 1,000. If one of those 10% got hit one day, let's say you held it through earning, and you forgot about earnings, and you had a gap, 20-30% won't make such a big hole in your portfolio. So these are the fundamentals that I'd like you to keep in mind when you're trading. And then you move on, and then later on you're going to start focusing more on the chart. You train your eyes on simple clean charts. You look at over here, I draw a resistance and support. Sometimes resistance will be a flat line like this right in here, and sometimes like here, sometimes it will be just like that. So you will have like almost like a higher lows and higher highs and then higher lows. So like I said, I was looking at it right in here. Me with looking at the chart so many times, countless hours, you know, you will develop when the stock actually will be working on its right side wing, like here. Like you can see that the stock, after it corrected, instead of say it made A to B, B to C here, instead of going down like that and make the D leg, actually the stock went the other way around with a good engulfing bullish. Really, I like these candles when usually actually they open lower. Even this one did not. They open lower and they reverse back, and then went sideways, flagged. So when it did flag, actually it attracted my attention, and I was gonna get in right in here, but I never did. I don't have any position in this stock. And then from there, even if sometimes I get in like full position, sometimes I get in 50%, and then when it breaks and I get in full position. But to be honest with you, I don't like adding. I'm not really so good at it. Adding the position, it just messes up my average price. So when I get in full 100% position. There's nothing wrong but getting in here. And then set your stop loss and just let the stock run. The one I had recently, I bought, it was like back here, like this one, for example, Reggie, I bought it way back here, right in here. So it was working on its right side, and then it kind of flushed me, so I sold half. I tweeted about it, and so it got me concerned. And then when I saw this, I was like, okay, the stock is still in the game unless if we start breaking below that low. And then from there, the stock just really rocked higher. I took some profit all the way up. Look, and then so what I say by things that I'm going to show you to keep you in check, so you don't have to worry about emotions. What I'm going to do, like let's say for example, just keep it simple. And so I'll give you information, but I'm not going to guide you, take your hands off one step at a time. So I'll just give you like a general idea and see if you can. And that's what you should do. Like you should find for yourself within that strategy that you're going to feel comfortable with, and that's the best thing for you. And so when you have like $1,000, let's say you have 100 shares, divide those 100 shares to 3 or 4, so you have 30 30 30, you know, 30 shares. If the stock's moving to your favor within 10% or 20%, take some off. So you got in right in there, so the stock just went up, take some off. You know, usually like for the canceling, the stock, they say if the stock hits 25%, the stock usually will pull back. I don't know, but Reggie, let's check it out. Let's check here. Sorry, Reggie. See, we have that this stock actually. Let's see how much the stock did actually move. Let's say you bought it right at the breakout. Let's say that's the high that day. So you can see 18%. I mean, 18%, that's pretty good right there. Like you can take some profit. So you're 26%. So you can take some off. Sometimes the stock, I noticed this, they will go parabolic like Tesla did like a while ago, and it's still doing it right now. Like keep like some simple moving average. Like for me, I use the 21 and I use the 65 or 50, it doesn't really matter. I just like the 65, you know, and the 8 exponential and the 21. So let's say keep it like, let's say the stock moved into your favor, it did that 25%. Take that first third off the table, and then once the stock violates, for example, the 21, it closed below the 21, you take the second half, and then you let the third half, last portion of your share, until like conserve it, like leave it until it breaks the 50, for example. This is like when you follow like a simple step like this, like you keep all the noise out. I don't give a crap what the news said. Just let the price decide for you. Sometimes, like, what you can do instead of taking some off here, and like you follow sometimes the 8 exponential moving average. Once the stock so let's say you didn't take a profit here, and then you wait until the stock broke and closed right below the 8 exponential. That's about like 16%. Hey, I'll take that 16%. So so it's right here, and then you took some off either like on the 8 exponential. Let's actually add 8 exponential. Sometimes I'll just delete it. Let's see, 8 exponential. I like to put it in a purple. Exponential. So I have the 8. So I'm having here that all of them are exponential, 65, 21, and 8. So let's say either you take a profit here, and you take the first half. Either you take it when you hit that 2025. I've seen, or you can do like even less than that, 10%. If the stock moves 10%, sometimes they will. The initial break, they will move that 5 to 10%. Sometimes they will not necessarily they will go 25. Sometimes they will hit 5, 10%, and then they might retest. You can take that set a profit target with a 5 to 10% from the initial price. But this is a really important point. You can't just like buy the stock on a second day, like way like you're kind of late, and then you go from that price, because you might have probably a messy price. And this is really important when it's really a key for your stop loss, your risk management. And it's basically that where did you get in? You can't expect to get in here and then the stock will move in your favor. I mean, it doesn't happen all the time. So for me, I sometimes right now with the experience, little bit of experience that I got, I try to get in, anticipate the move before it even happened. Does it work all the time? No, it doesn't work all the time. But if the stock doesn't like here or like shook me off a little bit, I'll keep it in my watch list. And if it doesn't work first time, I'll keep it in watch list and I'll watch it. Let's say I got in here, I'm good. I'm lucky. The stock still did work in my favor. GRV, actually, I bought this one. Beautiful chart. Like it never violated the 65 or even the 50. Never did. While the stock actually, the SPY was correcting in some areas here. This one didn't actually break the 50 moving average. And I got in, actually, it was that day, 132. That's when I got in. So I anticipated the move. And I can go in detail if I'm going live. I can go in detail with you, like what I'm seeing here and all that. I love talking about it. I love talking about it. The stock started making higher lows. You can see it right in here. Got in here. The stock went in my favor, and then it jumped. I mean, from that jump, like I have a gap. I got to take some off the table. I mean, do I have to wait? Yeah, you can wait until you take that 25%, and then or you can wait until the stock breaks below like there, and then you can take first, third, and then you wait. Sometimes when they are way too extended, let's say the price between the price and then the 21, when it's like too much void, like there's too much space in between, sometimes I like to take some profit, because like when it hits 40 or 50%, or just simply follow that the 8 exponential moving average. It's really up to you. Like you will never find a solution that actually will fit the market. Like I always say this, like there is no such like suit that will, like a strategy that's gonna fit the market all the time. So you have to fluctuate with this. But so the more selling rules you have, the better for you. You can use like simple, like when you just start, you can just stick with moving averages. Once they get violated, like here and here, you take some profit, and then like let's say you took your first profit basically here. So now you took your first third, so you didn't wait until this one got violated. Let's say, and you took it right when it gaps up, and then you wait. So second, third, you will sell it when the 21 when it gets violated. Sometimes it will get violated, but the stock will close above it, so you have to watch that. And then the last third, you can use either once the stock starts closing below the 50, or you can actually make, let's say the stock just made a higher low. Let's say this is like a higher low. We just like right in here. So the stock actually broke and then moved away from here. and then now it's made a high. This is resistance. Now I'll move that stop right below here. And I really and for me, most of the time, like I will base like let's say if I have a last third and I didn't sell it yet, I will use the combination in both, and I will lean more toward last low, and it really will be different from one trader to another. And then again, when you trade them small, like I said in the beginning, 5%, whatever, you're gonna train your eyes, and then you're gonna see what's working for you. But at the beginning, just keep it simple, and you can use moving averages just to keep it simple. All right. So probably I talked too much for these two stocks. Let's jump in. But I just want to give you an idea and help you out and how to get your emotions out of the noise. Another one that I tweeted about, so lazy, NVDA. A little bit about NVDA. NVDA actually did something really interesting. Yesterday I tweeted about it right in here. This action was here. Yesterday was ugly. Look at that volume. And the stock was starting breaking that support right there, but today it reversed. So yesterday I was bearish, here I was bullish, and then when this action happened yesterday, I turned bearish. I was like, okay, stock want to go lower, and then today the stock just changed its tone. Okay, no, I'm going higher. So that's another key element in trading. Never have one biased on the stock. Let the price decide for you what it wants to do. Just wait until the end of the day, and then you decide. Now, if you ask me, like, when you're going to be bearish on NVIDIA, for example, I'll be like, okay, starting to close below that low right there, it will not be good. It will be ugly for NVIDIA. Or even starting to close below today's low, which is 515.46. That's the first warning sign for me that the stock will not look good. But until then, stock right now, this is actually a good risk to reward ratio entry here for me. I won't be surprised like if I won't get in here like I would, but I have no position. But again, for me here, this is good looking. Let's say if I had a position yesterday, I would have put a stop loss probably either the low here or the low there. Probably would have get flushed out. And then today I'll start another position. You're losing that 3-5%, and then you start another position. The key is it's not about how many losses you had, as long as you keep them small. If this stock keeps like getting hit and getting flushing me out, like I got flushed out first time, second time, third time, I would have to stop and then ask myself, what's going on here? The whole market is stalling. Are we in distribution? Is this like the end of the good bull market, or are we in correction? Sometimes it would happen if you get stopped out like a couple of times. Just pull back and wait for the stock to set itself up, and then get back again. All right. So here, because I just talked about it in my last video, I said this is like how we changed my tone, and I mentioned DT here. Like you can see the stock had a good nice trend in it, and then it broke below the 50 first time. And then it got rejected again second time. From here, if you show me the chart in here, I'll be like, okay, this is not looking good. And then the stock started making higher lows. That 65 usually on the way down, it will act as a resistance. You can see it here. The stock got rejected once, but here actually, once it broke it, you see, you can see that red candle, it became support, and then great volume comes in, and then he broke out, and then it went to test the previous highs, which is resistance, and the stock just moved sideways. Here's a little bit of flash that happened right at the 65, reversal candle, nice decent volume. This is sometimes what I look for on pullbacks. I like to get in on pullbacks like that, but I didn't get in. You put your stop loss right below there. So I'm still bullish on the stock. Back in time, like if you would have shown me this, I'd be like, okay, I'm gonna wait until the stock start breakout. There's nothing wrong with that. But again, as I learned my way up, and then you put so much work, and then your eyes getting trained and all that, you start seeing a lot of many things that you learn from other people. and I hope I'm giving you some insight. Now you start getting, you put in more tools in your box instead of, so the more you learn about cup and handle, wedge patterns and all that, inverse head and shoulders and all that, you start getting other entries like way before the breakout, before you anticipate the breakout. You can buy 50%, or you can buy the whole position like me, or whatever fits you. I'm just giving you the whole thing here, and you decide for yourself. DKNG, I think I talked about it as well. I had a position back here when I saw this reversal. It was a great cup and handle here. It reversed right here. I was watching the stock, got in here. I saw the stock, and as soon as it broke down here, I started let go of the stock. And then I say, this is your, and I said, start breaking below that candle. It won't be great. And actually it did. It broke it, and I was like, okay, stock is down. And then all of a sudden it flipped, and I saw today's action, yesterday's action, and I put a bullish arrow on it. That means the stock still didn't surrender, not to go down. So this is something that I really paid the price for back in time. And then when once my stop get hits, I'll turn bearish, like no matter what. And that was a huge mistake that I did actually back then, and I lost really quite a bit of profit and money as well back then, man. You have to be flexible, you know. Don't listen to nobody. Just focus on the chart itself. Let the stock, let the market or that chart that you're looking at decide for you. And then you will learn pivot points. You will learn when the stocks, if it violates this, that means it's gonna go down. But even when you analyze the stock and you're like, okay, this is a good probability, it's only an educated guess. The chart patterns and all that, they don't actually predict anything in the future. They just give you an edge over somebody else who doesn't. That's it. I mean, you find those patterns that have a good probability, like 50% and up, that they're gonna go in your favor no matter what, bear side and bull side, and then you act upon them. You find a really good 3 to 5% stop loss, and then you act on it. Stock flush you get stopped out, get out the trade, put in your watch list if you still believe in the stock, like this one here. I was bearish, and then yesterday I put a arrow on it that's going to go higher, and it did act well since then. There's nothing wrong with it. Let's move on. The video is getting way too long. But I like to give you an insight while I'm talking. TXG. I was watching this a while ago. Since let's take this out. When it didn't break below that low of here, that candle, or even below that candle here. It's just been trading to a range. It tried to do it, and then the stock started breaking below here. When I saw this, I'm like, the stock's not really acting the way it wants to. And then it started really drifting on the low side of the whole range. Like, if you notice the whole range here, that right there, you know, when you start trading below it, it's not good. And today, by all means, boom, the stock, the bull came in, huge volume came in, boom, and the stock really jumped up. What else? Let's jump in next. I want to go a little bit quick. Pins, really not a great stock. Actually, it did had a pullback. I like the action. Look how it did close. It really closed right at the top. 71. The highs was 71.41, 71.38 is the close, really. And I put a note on it here to see if it was going to bounce on the 65. Actually, the bulls came in and defined even the 21. When I see sometimes the stock just closed 2 days below the 21, I'll know that stock really wants to correct. You know what I mean? All right, next one. Let's move in quick. AKTS. I liked it. I have like really small position by an AKTS, but I liked the setup. Even though it's small, it's not really as liquid. But you can look at that. Look at the huge volume down here. Look at the move. It was actually $8 all the way to $13. And usually, sometimes if you want to see where the whole action started, just backtrack where all that action started. Because usually when the stock break out, it just goes straight up. You know, I mean, not all the time, but if you follow the price where it comes from, you will find that like the stock moved up here, moved 2 days sideways, and then once it broke, you'll know that's the price when you have to get in. If you're late, you're late. You know what I mean? And I liked today's action, even though it did not actually act strong. You look at it on hourly, I still like it. You have a good gap here. Somebody bought it, and if it would have been weak, it would have flushed everybody and start filling up this gap on the hourly. But actually, it did not. So it's still pretty good. So far, so good. Move on real quick. TXG, XPEL. I have a position on this one. I liked it. I love the fundamentals. When I looked at IBD, they really have great patterns. And I love the stocks when actually don't have that much volatility. I really love it. Almost you can say this is a cup and a handle. Really beautiful. I never got back in here. I wish I did. XPEL, I think it's an auto industry. I think they manufacture and distribute parts. Another thing, go back and watch the video. I hope I'll post it here now. It should be showing. I should post it. Look for the life cycle of stocks, like it's how the stock actually move. You know, when you have that in mind, you know what to look for. So actually, stocks don't go straight up. They will make a pattern like this one is like cup and a handle in here. Break out, buy it. You have volume, buy it. It moves up, take some profit, and then it moves up. And then watch those moving averages. If it violates one, close below one of them, take another profit, and then let the stock tell you when to take profit. That's it. Keep it that simple. Don't get in and out of stocks too many times. Stock moved from basically 1750 all the way to 2860. It has to rest. It breaks almost 2 days on here. That's my sign. I developed that. It's just my that's what I notice when looking at stock too much. I know the stock is weak usually when the stock is really strong. Either it will not close below even the 8. It will go straight like FTCH. I actually missed. I had a position and I closed it even here before. I don't know what I was looking at. I got into it right here when it was actually it moved up and it was sideways. And the stock, look at the 8 exponential moving average. Look at that. If you would have just got in here, for example, you took some profit here, let's say, on it, if you had 20%, like I said before, look at the 8. It never got violated. Never did. So imagine if you just hold it and then you let that 8 moving average decide for you, should I take some profit or shouldn't take some profit? Like, just look at the stock. Probably you would take some profit maybe here and here, and then you still have some more. It even violates the 21. So this is like one of the examples that I want to tell you, like when you just keep them simple. Follow those moving averages and let the stock tell you what to do. What I was discussing, XPEL. XPEL, so stock moved up, went sideways, broke out again. You buy it again, put stop loss, let the stock watch the 8 moving average. Never gets violated. Never. When I say violated, meaning never closed below it, and then you just like follow it. What does that tell you? Stock is really strong. You know, that's it. Simple as that. Nobody wants to sell. Nobody. Everybody's holding. Investors, hedge fund, they like it. They want to push the stock higher. Look at the volume today. I like today's action, even though it kind of gave up a little bit. But hey, 5.6% today, really good. I was looking at it actually on hourly today, and then I got in. I think it's like 53.70. I should have got in usually at 52 below that, but I got in at 53.7, I believe. Yeah, 53.7. I usually don't open my position during time, but I actually did on this one because I realized the pattern and I know what is my loss at. So usually for me, I would get out at 51, for example. I will just totally get out. I usually wait until the end of the day and then buy the stock. So yeah, really good, nice action. I love it. No volatility. Really love it. I even opened a position yesterday and I tweeted about it on Uber. I like these really strong bars right in here. On the second, look at the stand of these bars, man. Look at the volume on these bars. And I do really love them when they hit the 21 and they open lower and then they push higher. That's bulls, man. They showing their hand. Like they saying, we're here. We're gonna defend this stock. And consolidation, you have a clean pattern, pushed back again. We never came back to that low. That tells you not a sign of the bulls defending the stock. Really holding that 21. Never closed below it. That's another key you want to notice. And then today, so I got in yesterday. I opened a position back 2 days ago. Here on this day, it was small, and then it added yesterday on that position. And then today, volume, it just confirmed what my educated guess. AKTS, PI, I talked about it. LAD, FCell, Uber, DEC, LPSN, AMD. I have a position back here. I do have a position on AMD. Actually, I bought it way back on 89, something like that. It was actually right 89 or something. I had it way back here. I think it's 84 something, and I added on 89. As you can see, the stock moved up and then it went sideways. That right side handle, like I said before, this is when you develop a good eye, and then it takes time and experience. You can develop it later down the road, but just as right now you can stick to like clean and simple, like a nice breakout like Expel that I just mentioned, and or Tesla that it broke out back here. I got into Tesla way back here. I think it was 230 or something like that, way back here before I anticipated the breakout. Because a flag and right side. Look at again. Probably barely violated that 8 moving average. So if you buy it in the breakout, and then you take some profit and you write the whole 60% of your shares, you let it ride it, man, you double your money. Like for me, I would have probably made 89% already. And then by the time you will start getting extended, look at the difference. Look at the space between the 21 and the price. It started getting stretched away from it, and then the stock usually, it's like it's stretching a band. I think you heard this before. When the stock or the price of whatever index you're looking at does not like to get far away from home. Basically from the 21, it will come back to it to correct. If you notice with me back here, now this candle here, look at the space, or sometimes even here, you take some profit there. You get the idea. What else? I hope you really get some good insight with this video. What else? NAP, PRSC. In the video, we talked about it. Deva, eBay was a good one. Kuhu is a good one, like a clean and simple stock. Charts. Look at that. Look at the 8 moving average. Look at since the breakout back here, and you did had higher lows. You know, right in here, the volatility started to shrink. When it start getting to that resistance, it broke. Look at the volume. Notice that volume. Ride it. Took some profit and ride that 8. Look, if you ride just the 8, like you'll be like genius. You know what I mean? If you just ride it, you'll be genius. It gets violated here. You get in. And let's say you find it. I mean, finding a stock is not the key. You gotta search for stock every day. Like I do. I just love to look for stocks. I miss a bunch of stocks, and I won't get like I'm not saying I bought it here. I don't have any position on this stock, but I'm saying if you keep looking, stock actually will look different back then. You know what I mean. But you have a good chance when you look at that volume, when you look at the volatility contraction, and then you'll take some profit once the stocks start getting like close to this high, because you know some bears will be here shorting. You can take, let's say if I got in here for example, and I'll say, okay, we have a resistance here twice that was tested twice. I'll take some off here, or even before even it gets close there. If you got in here, even sometimes I don't really like when a big candles like that, when stocks move more than 5%, I don't like to get in. Even sometimes the stock won't listen to me. The stock market doesn't care about me, what I think. I just don't like it because risk-reward ratio won't work in my favor. If I see it here and I like it, and it's more than 6%, 7%, I will just reduce my position. Like instead of getting 100 shares, I'll get 50, 30, 40. You know, if you want to anticipate, if you want to participate in that movement. The stock actually moved here and then sideways a little bit, and then boom, and you can see some bears came in, took some profit right at that level. So things like this you have to keep in mind. You know, it comes with the process, it comes with learning, and then you let the stock do what he wants to do. You know what I mean? I remember one day I learned from somebody, oh, when it hits this, when you see resistance, get off your position, blah blah blah. And man, on that stock, I don't remember what it was. Man, the stock, man, I got in way too early, and it was really good winner. I was like a couple of years ago, man. I was like, man, why do I listen to people? You know, I never had the foundation. What should I do with like selling rules? You have a buying rules, you need selling rules, and I just give you some of them. You know, do your homework again. Beautiful. And then stock consolidated sideways. It has to digest those gains. You know, my man, we went from 1810 all the way to 38. Look at that. That's a huge move. And look at the volume up here, and look at the volume on the sideways, really low. Look at the volume again on the break. You know, I was looking at the stock back here, and when I saw this action, I kind of liked it. And stock sometimes don't give me that much time, and it just like poof. Here, just like gave me like only like 1 day, 2 days. I was gonna jump in on it like right on this day, and I did not. I was just watching it. Another stock. What I was gonna mention something. Oh, eBay. eBay is like. Sometimes I'll, instead of break out, I'll just watch some. And I did tweet it about this. The stock had a really nice move, and it wants to digest it's this move in here, and then you will see the stock actually making higher highs. Now it's making higher lows. You know, here and then here, and then he's making lower lows as well. Once the stock is getting ready to move higher, it will stop actually making his lower low, and it will start making higher lows. We stopped here. Like I said, that 65 usually, or the 50 will act as a resistance on the way down. You see that happen here. Reverse candle, boom. Instead of keep going lower like this, it actually reversed with that great candle there. That's a real sign right there. We broke that. I drew a chart, I drew a line that would connect all these dots. That's all I did. There's nothing fancy. And when it kind of touched in it, and it closed next day down a little bit, so that's not a confirmation that the stock was really, this resistance is really in there, intact. It's not just like a line that I drew there. The stock is really telling me, hey, that's a resistance right there. And then the stock pulled back down. Again, it's not going to be really perfect on that 65, but you can see we never closed below that great breakout candle. With volume, we came really down to it. We never did. That day would have been a great risk-reward ratio for me. Like if it's not a breakout, that would be right there. I put a stop loss right below that low, even below that candle. And I said don't want it to close below that support line, which is actually right below there. You know, it took me time to realize things like this. It really took me a long time buying courses and seeing other people's perspective and what is this and what is that. It really takes time, man. And still on stock, it's still like it's an early stage of movement. I can see the stock still moving sideways a little bit, drift down a little bit, drift down, or just going sideways. We just don't want it to close below that 49.69. You don't want it, but right now, look at the volume on the way down. Look at the volume on the way up. So here would really been a great risk-reward ratio. That's like advanced. For me, I call it like an advanced early, like way early in the game. That I did that with Baba actually a while ago, and so you would see the stock pull back, digest either in time. I mean, in time like this. When I talked about this, one of the videos I talked about it. You just gotta go back and watch those videos. And then the stock will drift down. It will digest in price. Stock will digest in time, or it will digest in price, and then you will see a breakout of this trend. We'll talk about it probably down the road when it breaks, and the stock will maybe start acting. So these levels here, what is it? The 58 probably will act as a resistance on the way up. I think the same thing happened to ADV, and I did mention it. Notice here. Notice how fast we had a reversal candle, opened lower, closed higher, and look at how that, since we broke here, look, it kind of like tried to broke that 65 or the 50, and then every time it does that, it doesn't even, the sellers won't even give it time or breathe to stay a little bit above it. It crashed it. But here we broke it, couple days, stayed above it, acted as a support, and then boom, right there. And I think I talked about it like on that day when it broke out. Beautiful. Take some profit. Look at again, 8 moving average. If you would have bought it here, if you find it again, that's a big if. But you gotta look. You gotta look for stocks. Another key, you want to look for stocks every time the market correct. This is really, really important. When the stock market correct, you shouldn't be panicking. You shouldn't be selling to some profit at the time. And the most important thing you really want to keep in mind, I wish somebody would tell me this. This is huge. Ready for this? When the market is in correction, you want to look for high relative strength stocks that actually, when the market is going down, you want to look for stocks that's either going sideways or even closed green. Those are going to be the leaders. Keep that in mind. And let's say you got in here or even got in second day, take some profit once these moving averages get violated, and leave the last portion to be just let it run. That's how you make those winners. Another EA Sport, I think I mentioned this, I don't remember when, but look at that. I was watching it way back here. Look at that great candle. Look at that volume, man. Boom. Sometimes the stock will if it's weak or if it's in the bar market, it will flash you, will come back. Boom. And then look at the 8 moving average, dude. Look at that. 8 moving average, never close below it. You open it, you open the chart, you look at it, okay, you say, okay, the stock closed below the 8 moving average, I'm going to take some profit off. Or you take initially, like we said before, 10, 25, whatever, 15, 16, you decide. Keep it simple, 10, take some profit, 20 or 30, or once it violates one of these moving averages, take some off, but here sometimes I find stocks are kind of weak when they start closing below here. Sometimes they will do that. They will close and then flush you back. Like for me here, personally, I would add more. Let's say I took some profit here, and then I took my second share half off the table because it violates that. That's why you keep it simple, like I said. And then you take it, and then you see this really nice reversal candle along with the market, along with the NASDAQ, like a reversing good action of the market. I would give me the conviction to add more and put a stop loss or like right below that candle. If I see the stock reverse back and close below there, I think I'll anticipate that the stock's really weak and wants to push lower, especially when we come into these highs, these levels here. You can see it on this line that I have here. This is the high, so I'll anticipate like here and here. So you can see, what is this? This is the 86% on the Fibonacci. You can see some resistance. The stock really acted. It wants to push lower. Even though like we broke here, it was really nice and it flushed everybody. I was expecting the stock really is going to go up, and it didn't. Because we have it on the recent couple days, we had a whole NASDAQ just flushed. It was like some sector rotation. So here, but this one really looks good. Video is really long, but I really coming to an hour. But I hope that you find some value in it. If you do, actually leave me some thumbs up and like. I'll try to answer as many questions. ACMR, this is like another one that I got flushed out. This is a good lesson here. FLGT run. Oh man, I really did mess up this one, and I talked about it when let's see it. I talked about it back, not in January 4, but actually on stocktweets.com, not on Twitter. Actually, look at that. That's the tag. It was actually viewed original because I retweeted it. This right there. I on December 22nd. I see like the 4:58 on the East Coast, 4:58 a.m. and I tweeted it. So let's go back to the 22nd of December on run, and 12/22 right there on that day. When I saw it here, you can see volatility contraction pattern, like almost like a cup, and then the stock came back, and then it here, when I saw that, I was like, okay, the stock really working on its, what we said before, right side wing, right side handle. Let's look at that volume coming in. Look when we pulled back, but I never actually pulled the trigger. There were other stock that I got attracted to, and I bought them, and I saw it again back here on this day, and I said that's when I retweeted it again on the 4th. So I saw the stock, and I tweeted it on the 22nd, and I saw it back here, and I said, I remember this day when I said, okay, if the stock give me a red candle, just like a pause, I would definitely buy a position right in here. Put a stop loss right below here, and look what the stock did. Boom! Actually, it's like 30% right now. Already went without me. What a shame! I would have taken some profit already on this candle here, or take more even here. Yeah, if it was me, and I'll leave some off, like a half position or something like that. What else? Back on Twitter, YNDX, Zoom, Big. Okay, I don't want to make this video way too long, but there's so many stocks that I like to talk about. Love, keep an eye on love. Spread love, not hate. RPD. Okay, I really hope you get something out of this video. From time to time, I don't like just to give you setups, but I like to give you what I see so you can learn along with me. Subscribe. This is your first time watching me. Give me a thumbs up if you find some value again on it, and I hope to see you soon. Okay, all right, take care. Bye bye, be safe.